Hey everyone, in this video we're going to continue on with our Chapter 7 workbook exercise videos, and we're going to work on AP4B in this specific video. So again, very similar problem to the ones we've seen previously, and hopefully after we get through quite a few of these you'll start to feel comfortable with them. You start to see kind of how these work and start to feel confident. Okay, so let's read through the instructions here. So this notes that our bank had an ending balance in the bank statement of $16.40, and the cash balance per our ledger was $19.21, and then we've got all this information below. So let's just start working through. Okay, the bank returned an NSF check in the amount of $264 that we had deposited earlier. So as you recall, we're going to reduce that from our ledger balance because we thought it was cash, but it wasn't. So let's put it in our column here. So yeah, unfortunately, we're going to have to collect that money from the customer still. A direct deposit was received from a customer, so we had an EFT deposit. That's an addition, an add to our book balance that we had not yet recorded. The bank withdrew $41 for a bank service charge. You'll notice in this problem too that they didn't charge us a bank fee for the NSF check. Right, so just sometimes that happens, sometimes it doesn't. It's just dependent upon the problem that you see. But in the last problem, we had the actual amount of the check we had to recover, and then we also had a fee on top of that. But this one, it doesn't note any fee, so we don't need to do anything there. Okay, we got an interest. We got interest earned on our bank account here of $14. Okay, and then we had deposits in transit of $3,890. Okay, let's go ahead and add everything up and see we're good to go on our reconciliation here. Okay, auto sum these amounts there, and then we'll just highlight everything, hit enter. All right, see how the balances agree, so that's great. So we're now reconciled, and then we're going to go through and do our journal entries again. So remember, everything on the book side is what we're recording, and when we have something that's an addition, it's going to be an increase to cash or a debit to cash. And the EFT deposit is just the receipt of an outstanding receivable, just like any other payment received from a customer, basically. Say collect outstanding AR. We need our credit in there. Okay, and then our second increase, addition entry, is interest earned of $14. Okay, that's great. Then down here we've got deductions, so we're going to be crediting cash and reducing it now. We have our first one is the NSF check, and remember we're going to need to change that. We originally thought it was cash, but now we're going to reduce our cash back down to reflect the fact that it wasn't cash, and we're going to change that to a receivable, indicating that we need to collect that still from the customer. So hopefully we can find that individual and make that collection. And then we just had a bank service charge, normal fee, operating expense here of the $41. And just our explanation. Perfect. Okay, so now once we finished this out and recorded our journal entries, we're good to go. Okay, so very similar again, and hopefully these are becoming more familiar to you all, and you're feeling confident. They're relatively similar. They're kind of fun. I like doing these problems. I don't know if you all will share that same sentiment, but I think that they're kind of a fun numbers puzzle kind of thing that we do, and it's a real process that we need to do every month as well. So in the real world, sometimes they can be a little bit more frustrating. Sometimes maybe not quite as fun if you have some weird issue that you're running into or something really challenging. But yeah, so let me put in my for interest earned. Just forgot to put that explanation in, but looking good on this whole thing. So we're all wrapped up here, and in the next video, we'll do the final problem here in our workbook exercises of AP 5B. All right, thanks everyone. I'll see you in that video.